Hi, this is Ian Coleman and this is this week's video analysis for the 28th of January 2019. Going to break down time frames, looking at monthly, weekly, daily and intraday charts, dollar index, and then on to the rest of the FX majors, basically highlighting our bespoke support and resistance levels, what chart formations we're seeing, basically what we're expecting to happen for this week. So we're going to start with the dollar index. We've seen choppy trading to the downside and then quite an aggressive correction higher. However, levels near the 61.8% pullback at 96.71 have found sellers. And we've seen an aggressive move to the downside on Friday last week. Now, if we go to this time frame, just explaining why we've still got a bearish bias, broken out of a wedge formation to the downside. The measured move target is 93.84. If we go to the monthly chart, now the monthly chart has posted what's known as a perfected 9 on DMARC, and that dictates that we should see at least a correction to the downside within 1 to 4 candles, and we are starting to move lower. If we look to this time frame, the previous swing low is pretty close to the 161.8% extension at 93.37. I think we're still going to continue to have mixed, choppy price action. We could even see a bounce off this support to then form a head and shoulders. So this would be the left shoulder, this will become the neckline, this will be the head, and then this will be the right shoulder. So the immediate bias is still to the downside. We're obviously looking now to sell into dollar rallies, if we're not already that way round, basically, on our medium-term calls. So euro dollar, we did clip a long-term trade in this currency pair. Again, we've had a very prolonged period of consolidation. Bespoke support was at 112.95. We did post a low of 112.89. This is a corrective formation at the moment, so do expect price action to remain mixed and volatile. And if we just go to this time frame, which is the 4-hour chart, we have got some bespoke resistance at 114.26 at the beginning of this week, and I'm just wondering whether or not we will just see a mild correction lower to offer intraday dip buying opportunities. Medium term swing high is at 115.70, 115.82 is our bespoke resistance level. Sterling dollar, now it's broken that expanding wedge formation that we've talked about. Again, we've got a perfected 9 here. If we look to the monthly chart, a perfected 9 candle. If we stay around current levels, then we're also going to get a bullish outside bar. Often indicates the bottom of a trend. So everything's really pointing to the upside for cable. The weekly chart posted a 13 count and a bullish engulfing candle. We're moving up towards previous swing high. There's no clear indication really at the moment that this rally is coming to an end. If we go to this time frame, this was the expanding wedge formation. We broke out, we didn't get our retest. The measure move target is at 133, the figure, which is the start of the wedge. We've got a 161.8% extension level, 132.74. Support, bespoke support at the beginning of this week is at 131, the figure. Dollar Swiss, we're expecting price action to remain mixed and volatile. I suppose quite an important time frame is this weekly time frame. We're winding up in a wedge formation. We've also seen some divergence off the high. So in other words, the chart makes a higher high, the oscillator makes a lower high. Often see this in wedge formation. So it has got a long-term bias to break to the downside in that time frame. However, previous swing high, stalled price action. We could be forming a reverse head and shoulders pattern in dollar Swiss, and we're actually going to be looking at buying dips. Sterling Swiss, Euro Swiss, the rallies are looking a little bit overdone, so there is scope for a move to the downside in those two crosses. but the medium-term focus is still to the upside. So we'd prefer to buy dips in dollar Swiss than to actually sell into gains at the moment. Dollar yen. We completed a bearish Elliott wave count to the downside. We've had pretty mixed and volatile price action. We were looking for this wedge just to play out and possibly move higher. We're looking to sell dollar yen around about 110.38 on Friday, but we've seen sort of prolonged period of consolidation. Now it looks like we're breaking the wedge to the downside. However, there's no clear indication in our sort of bespoke support and resistance levels that this is a prime area to get short. So we're still going to hold off. We're going to see whether or not we can move up towards that 110.40 area, and then we'll have a look at price action. So at the moment, we've really got a mixed view on dollar yen, and would prefer to sell into rallies. Dollar CAD, we managed to get short. We were talking about this formation, the potential head and shoulders, so left shoulder, head, neckline, which we're looking to possibly break next week, and then this right shoulder here. The measured move target on this move is around about 127, the figure. If we go back to the weekly chart, we can see excuse me, bearish outside week close to the 61.8% pullback level at 136.86. No clear indication that this sell-off is coming to an end. We have broken the channel formation to the downside. Reverse trendline resistance is at 132.80. We've got bespoke resistance at 132.66. You can see here how impulsive the sell-offs become in some commodity currencies, and we might be lucky to get a bounce. It is looking oversold on an intraday basis, but if you notice here, corrective rallies always seem to be limited in dollar CAD. Aussie dollar. We've posted, let's go to this time frame first. So the weekly chart, we can clearly see 5-wave count to the downside. Very disjointed Elliott wave formation. I think the most important thing here is this 261.8% extension, excuse me, and the start of the wedge formation, which was obviously the target area. All the initial dip last week got bought into. We really haven't got anything in the way of resistance until up here, 73.86. Sorry, 73.78. If we look to this time frame, which is the daily chart, we posted a bullish outside day on Friday. Bespoke support is at 71.37. That's going to be very close to the Marabuzo level. Like I'm saying, we haven't really got anything in the way of resistance until up here. So yes, we will be looking at buying into dips at least for a corrective rally, should I say, up towards around about 74, the figure. Euro sterling just keeps moving to the downside. Likely to post a bearish outside candle on the monthly chart, which is obviously negative or bearish for the long-term view. 83.03 is the measured move target. 84.51, we've got bespoke support sitting inside there. If we look to this time frame, levels close to the 61.8% pullback at 90.44 found sellers. We have stalled close to the previous swing low. Strong bespoke resistance, and that basically means we've got a confluence area of different time frames that are highlighting resistance around this level, and that's at 87.89. We want to get short. Basically, we've not had the opportunity, or we've not triggered any short trades in this cross as yet, but we're looking for rallies to sell into. Euro yen, bit of conflicting analysis, if you like, on this pair. Going to go to this time frame. This highlights a bullish bias. We've got a hammer bottom, but we've noted this last week. This is a DMARC 8 count. Normally, we'll see a 13 count before we see a move to the upside. Now, the 13 count should be below the 8 count, which is here. So it means that this is sort of the buy zone for a medium-term move higher in euro yen. However, this time frame, the 4-hour chart highlights that long period of consolidation being a bullish flag formation, and we've broken now to the upside. We have tested reverse trendline support at 124.90 on Friday. We've got some intraday support at 124.60. We'll probably look at that on Monday as our sort of trigger level. But like I say, the medium-term view is really for a dip buy at lot lower levels to take euro yen on a medium-term basis, at least, to the upside. Okay, thanks guys. I hope you have a good week, and we'll speak to you again soon. Many thanks.